Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Friday, July the 12th, the year 2024. Let's talk trading. Weekly wrap up with Walmal. As always, these videos are for educational purposes only. Your results may differ from mine and differ from Walmal's. And at the end of the week, it's just as important as the beginning of the week to always have your risk management in place. Never lose more than you are willing to lose on any one single trade. So looking at the weekly, we've got all the gaps filled across the pairs. The pound right now is sitting at 178 pips above the weekly open. If you look to the left, you see we broke all the highs visible on the chart. We're only about 1 pip off the high. We're 196 off the weekly low. And for the month, we are 327 pips above the monthly open. We are once again about 1 pip or so off the high, 358 off the monthly low. And for the day, you can see here, we are well above the opening range for the week. Anybody took that breakout on Wednesday and stayed in the trade, you're rewarded with over 100 pips. We're above the opening range for the year and well above the opening range for the month. And we've got news in about 10 seconds. So quickly, 261 above the yearly open. We are 2 pips off the yearly high and 674 above the low. And we're making new yearly highs as the news is breaking. Walmal, what news are we looking at right now?
We're looking at the consumer sentiment, University of Michigan, which just measures what their survey does in terms of where people think the economy in the U.S. is going, and it's also a preliminary of the University of Michigan's inflation expectations.
Well,
so the news drop for consumer sentiment, which is they expected 68.5. Just so people understand, 100 would mean that it's people are 50-50, and right now we've been really low on that. So people in the U.S. believe that the economy is not doing well and is not heading in a good direction. So that's where it is, and it actually came out worse than what was predicted. The inflation expectation, they didn't put a forecast number out there. The previous month was 3%, and the actual for this month is 2.9. But again, those are preliminary numbers. We won't get the real numbers until the end of the month.
You know, it's interesting. We gapped up, but now we filled that gap.
Yeah. That's on the news. It tends to do that. But I don't know if you noticed or not. Because we're on the same broker, if people go back and look at the video, if you're on a 1 minute chart, I'm not sure what chart you were on.
Yeah, 1 minute.
What happened was about 2 seconds or 3 seconds prior to the drop of the news, the candle was actually, the 1 minute candle was actually a black candle. And in that last second, it went and flashed it white. And then when the new candle came out, it actually opened black. So it's just kind of interesting. News does that all the time. Nothing new or strange about that. That's just what news does, because there's such a, people have these orders sitting out there. If price gets here at this time, drop, and then all of a sudden you get all these orders being filled. And the problem is the orders are being filled on both sides, and it just makes the market do some erratic things at that time. But it looks like what's happening is that the market is moving up. We're gonna, I had said, or you had said, one of the two of us had said, towards the beginning of the week that there was a good chance we're going to hit $1.30. Probably not this week. Well, you know what? There's a possibility that we could actually hit it this week. Meaning today, because we're only 20 pips away.
About 25 right now. Yeah.
Yeah, it just dropped. Yeah, but it's just the point is that it showed you how big a weakness was moving in that direction. The other thing that's interesting that I've seen is that we actually had 103 pips yesterday in terms of the smart range, and today so far we've got 79 pips, and we're right up against the high of the day. So it potentially can go and move up, which is interesting because I've been talking a lot about how we've had these days that the ranges have been small, but the thing is they've been creeping up a little bit, and maybe that's a good sign that the market is starting to pick a direction. The only reason I say that's good is because if you're able to pick up the direction the market's moving in, the trading seems to, at least for me anyway, trading seems to go a little bit easier to go and deal with it. The other thing is, and this is kind of the weekly update, that you just went and did, but just adding to it a little bit. The monthly range is 366 pips on the smart range, which puts us in a 47 percentile, and we're not even 2 weeks in yet, which is uh, so much better than what we've seen. It's already higher than the last two previous months. Last month was only 248, and the month before that was only 355, and we're already at 366. So, or it looks like we may be starting to break this rut we've been in and not moving. At least I hope so. It'll make my life a little bit easier. Maybe I'm being a little bit, you know, I'm being a little bit wanting things to happen my way a little bit to make my life easier. But I guess that's okay. We can always hope for that.
Right. Yeah, you mentioned we've got 366 range for the month. I believe we may have pushed the year-to-date accumulated range. Yes, we have. We are now up to 682 because we made that new monthly high. So that's something to note, which is interesting since this is summer.
Right.
And so if we check it, we look at the ATR percentage, we're at 99 for the month of July right now.
That's interesting because, but then again, our months have been so compressed as of late. It makes sense that any type of movement's going to help that a little bit.
Right.
Going to help that. It's going to help that calculation. So, but again, these indicators and these, they don't go and tell the whole story. They just give you a little bit of a snapshot of what we know right now, and maybe they give you a little bit of a glimpse as to what you should or you shouldn't do. And usually for me, what they should or shouldn't is not necessarily take a trade or not take a trade. It's usually more of how cautious do I need to be because, once again, what's the most important rule? Preserve capital at all costs.
Right.
And so, if I'm getting indicators out there saying, hey, you need to be a little bit cautious here, I'm going to be a lot cautious.
Right. And just one thing to note, I had been mentioning, for about the past couple of weeks to look for those yen shorts, the dollar yen. And I don't know if anybody caught it yesterday, but it came crashing through the weekly open. It had already done some top scraping if you look to the left, and it just paid off by over 300 pips, almost 400 pips. Yeah, we were at 161 and it came all the way down to 157. So there was a huge opportunity there. It was just one of those things where I just traded the dollar yen for so long. It's just pretty funny how these things pan out. You just get that, I don't know, call it intuition, call it experience, chart time, but you almost can see these things coming.
You make a good point there. And that is that, the one of the reasons why I only trade the pound dollar is because I've gotten so used to it. I've gotten so, I it's sort of like my baby brother, I just I know what he's going to go and do. I know what he's going to do before he does it. And I'm not saying that you're perfect at it because, you're never going to be perfect at it, but you get a really good, oh, look what it's doing. Look how it's doing this. It's the type of thing where I knew, I'll give you a perfect example. The last news drop was at 8:30 Eastern time. So basically an hour and a half ago, a little bit more than an hour and a half ago. And I knew that the market was going to move because of the way it was going in, moving up spread and separating the spread and the way it was moving it up. And what I mean by that was, or what I mean by that is, it would go and move up, but it would only move up by like a tenth, meaning 1 point. And then it would move up by another point, and then move up by another point. Maybe it dropped a point, and then it move up, and it just kept. The next thing you know, you're looking down at the spread. My normal spread is 0.2, 0.3, something along those lines. Next thing you know, I'm looking down at that thing, and the spread is 1.2. So a pip and 0.2, and but because of the way it moved, I knew that it was going to go and have some type of huge movement. I didn't know which way it was going to have that huge movement, but I did know that there was going to be a huge movement. So that would have told me that if I was in a trade at that point in time, get out. Just get out because there's going to be some type of move of maybe 20 or 30 pips, and maybe even flash back 20, 30 pips the other direction. I don't know, but I did know it was going to go and move like that. It was going to have a big move, and lo and behold, that's exactly what it did. Now, the news that just went and dropped about 10 minutes ago, what happened there was the spread moved up, and it moved up to about the same area. But the difference was it didn't go and do a nice, gentle move up in terms of the spread. It was what it did was it went from like 0.3 or so, and it went from 0.3 all the way up to 1.5, 1.6, all in one fell swoop. And it's like, okay, this thing is probably not going to go and just take off like a lightning bolt. And lo and behold, that's what it did. How do I know that? I just know that because I've past years, since 2007 or so, 2005, whatever it was, must have been 2005. And I've been watching this one pair since then. I know what it's going to do, before it knows what it's going to do. And there are just signs that it goes out there and it's able to do that. And you can take advantage of that. And again, for me, what it is, take advantage of it from the perspective of making sure you don't get caught with your pants down. Same thing with you. You had traded the dollar yen for so long. Where there are certain levels that just are extremely, sensitive to the dollar yen, and you can see it. You can see how it gets to it to a particular level, and you know that okay, this thing's going to reverse off of that, or it's going to get to this level and it's going to take off, whatever the case may be. But you just know it because you've traded so long, and that's the advantage that you have when you're trading only one particular instrument. Because the dollar yen doesn't trade like the way the pound dollar does. The pound dollar doesn't trade the way that the euro dollar does. They trade differently. They're different. They're different animals. They're different people. Institutionally, now the retailers are the same retailers, okay, but the guys with the big money, the banks, the corporations, the ones that really are dumping literally hundreds of millions of dollars into this market, they're different players, and because they're different players, it causes the market to move differently. At least that's my thesis. Whether it's true or not, I don't know. Take it with a grain of salt. But it's just something I've learned over literally the decades at this point.
And goodbye.